I want to start out with a disclaimer, letting you know that this is just for educational purposes only. This is not intended to be tax, legal, or financial advice. While I am a tax advisor, I am not your tax advisor. So if you have questions specific to your own situation, be sure to reach out and engage a tax professional who can help you with your tax situation. And so, just to get started, I want to talk about LLCs and S corporations. First thing I want to mention is that you don't convert from an LLC to an S corporation. It is an S corp is an election that you make, and when you start your business, you likely are told that you need to have an LLC. You may start out as a sole proprietor, just depending on where you're getting your advice from. In some cases, it may be okay for you to operate as a sole proprietor without forming an LLC. Um, with a smaller business, someone who's just getting started, that's fine. If you are expecting for your business to become profitable really quickly, if you have a business that exposes you to certain types of risk as far as liability, you may want to consider forming an LLC. And just from a forward-thinking tax perspective or strategy, it may be a good idea for you to go ahead and form an LLC now so that in the future, just say that you started your business, you didn't really know whether it was going to take off or not, and it does. You get halfway through the year or even towards the end of the year, and the business is really successful. It looks like you are going to have a pretty decent profit. And if that's the case, if you've already formed your LLC, then you'll have the option to elect to be taxed as an S corporation. So, and we'll talk a little bit more about that. But forming an LLC is a limited liability company. And essentially that's all it does is it limits your liability. So if you were to do something in the business that raised a risk of you being liable for causing harm or damages to somebody, that LLC will protect your personal assets. So that's all it does. It limits your liability. Doesn't really have any tax advantages. And I know a lot of people are told that if you form an LLC, then you can save a lot in taxes. When you have an LLC, again, that's something that you form at the state level. It limits your liability. And from a tax perspective, any taxes that you would have as a sole proprietor are still going to be relevant as a limited liability company. So your self-employment taxes that you pay, which are essentially your Social Security and Medicare, those are things that, the government wants to make sure that you are paying. So if you have profit, you'll pay self-employment taxes on that profit, which is essentially 15.3%. So any profit that you have, say that you do $40,000 in sales, you have 20,000 in expenses, so that leaves you with 20,000 in profit. You'll pay self-employment taxes on that, in addition to your individual income tax rate. So whatever that rate is, you'll pay that tax as well. Now, when your business reaches a point where it is going to be profitable, and I usually say at least $40,000 in profit, there may be some situations where it could be beneficial at a lower profit margin, but just around the $40,000 mark. And you'll hear different amounts from different tax professionals. But if it looks like you're going to have a profit of at least 40,000, then it might make sense to elect to be taxed as an S corporation. S corp does not change the fact that your company is a limited liability company. So at the state level, you'll still be an LLC. What that S corporation election does is tell the IRS how you want to be taxed. So instead of having your entire profit taxed with as self-employment tax at the self-employment tax rate, what happens is you're required to establish a reasonable compensation. So you become an employee of your S corporation, and you are required to be on payroll and pay yourself a salary. So you're essentially a W-2 employee of your of your company. And so whatever you designate as your salary, that's where those employment taxes are paid, your Social Security and Medicare taxes. You as the employee will pay half of that 15.3%, and then the company pays the other half. So essentially that entire 15.3% still gets paid, is paid differently, and it's only paid on that portion that is designated as salary. So even though this amount is typically low and not something that you would see in your as a salary in your S corporation, we're just going to go with that 40,000 revenue and 20,000 profit. Out of that profit, just say that you paid yourself $10,000 as a salary. So you would only pay those employment taxes on that $10,000. The other 10,000 of that profit would still pass through to you as the shareholder, and you'd only pay your individual income tax rate on that. So it gets reported on your personal tax return. So you have those two pieces that are reported essentially on your personal tax return. You'll have a W-2 for $10,000. You'd have your federal income taxes withheld. You'll have Social Security and Medicare withheld. And if you're in a state that has a state tax, you'll have those state taxes and any applicable local taxes withheld. The other $10,000 is reported on a K-1, and then you report that on your individual income tax return as well. And you pay your whatever your individual income tax rate is. So essentially, you're saving that 15.3% on that 10%, $10,000 profit that's not paid to you as a salary. Um, Now, that is where some of the most significant tax savings comes in when you make that election to be taxed as an S corporation. There are more, well, not more, but there are retirement plan options that are available as an through the S corporation, but you also have those options if you don't make that election. You're just an LLC. You can set up different retirement plans as well. So that's where you do get some tax benefit, but it's not specifically because you're an LLC. Those are tax plans for people who are self-employed or small business owners. So that's something that you might want to look into, and we can talk about that in another live stream or another session, the different retirement plan options for small business owners. But I wanted to specifically talk about your LLC and making the election to be taxed as an S corporation. Um, let's see if there's anything. Oh, the way that you make that election to be taxed as an S corporation is by completing and filing Form 2553. Typically, you want to get that filed after you have formed your after you started your business, you formed your LLC, then you can file that form. Most people, because of the tax strategies that I mentioned earlier, because of the profit level that I mentioned earlier, you might not form or elect to be taxed as an S corporation as soon as you start your business or as soon as you form that LLC. So you do have the option to make a late election. Typically, you want to form that. You can do that within 3 years and 75 days. However, under certain circumstances, you can still, even after that 3 years and 75 days, can still make that election. I've done it many, many times for clients. You just have to make sure that that form is filled out correctly. You mentioned the appropriate um, revenue procedure on that form, as well as include the appropriate verbiage on that form in order to make that late election. And then also you have to state that you have been operating um, in accordance with, S corporation, that you've been making your that you've established a reasonable salary, basically that you've been paying yourself a reasonable salary and managing your books as you would if you were an S corporation. If you make that election late in the year and you have not been paying yourself a salary, you can you can pay yourself a salary at the end of the year as long as you pay the applicable not self, the applicable employment taxes. Because the one thing you don't want to do is be fined based on payroll taxes. That penalty can be up to 100%. This is something that's a little complicated, and it's handled different ways by different tax professionals. And so you want to make sure that if you have not made the S Corp election and that is something that you are planning to do or considering, make sure that you are talking to someone who knows what they're doing, because there are ways to handle it. If you have not done payroll all year, there are ways to handle it, especially in that first year, that your particular tax professional may do for you. So just, reach out to them if that's a question or concern that you have. Um, let's see. I think those are the basic things as far as tax deductions. Your regular tax deductions or expenses, they'll be the same whether you are um, an LLC or taxed as an S corporation, except for your salary. As a single member LLC or sole proprietor, you cannot deduct whatever you pay yourself as an expense. If you're taxed as an LLC, an S corp, on the other hand, your salary is a deductible business expense. So that's another consideration that you'll have and that you can take. So if you have any questions, like I said, leave them down in the comments and I'll answer those. I think just from the perspective of looking at LLCs and S Corps, I have covered everything, but you may have specific questions. Leave those down in the comments, or if you want to send me a message, definitely do that. You can send me a message here. And then if you are curious about what your tax liability is, and you want to know that before the end of the year, in case there are some things that you can do to reduce that tax liability before it's too late, then go ahead and send me a message and we can schedule a time to do that. so that I can take a look at, where you are. Thank you for watching this video. If there's a specific topic or questions that you have or want to address in Ask Me Anything session, leave that in the comments as well. Have a great day.